Yeah.
Hey guys, hi. This is Chris Mincolla and Evan Einhorn with with Modern Home Lending. Now I got to get it straight. Modern Home Lending, and please, before I forget, let's make sure we get our. We want to make sure everybody's liking this. Share it with everyone you know, and make sure you go up to the top right, hit the three dots, and follow us here on my profile, so you'll always get alerted when the live broadcast goes live every Wednesday at 1:30. And also, we want to make sure that you guys are always asking questions, okay? Because we can learn from you, and you can learn from us at the same time. So. We were actually going to have Muscular Moving Men on today, but we're having a little technical difficulty with Harold's mobile device. So we're going to freestyle today a little bit. Evan, you want to just give us a quick idea of what might be going on with rates right now, and we can talk about a couple other topics we've got going here.
Yeah. Well, rates over the past couple months have been pretty consistent, but over, since the end of last year, they've been on the upward trend. And today and yesterday, we've actually seen a big upswing. So, which is not very good because, I was helping someone with a $450,000 loan a couple days ago. And today, that same exact loan is almost $3,000 more expensive. So, or you can look at it as, hey, now you're getting about an eighth higher in a rate. So that's a pretty big movement for just 2 days. Having that move in just 48 hours. So that's what we're seeing on our end. But we're seeing the purchase market's pretty strong. Like, people are buying homes.
Yeah, I know we're busy.
Right.
I know we're keeping you busy. And one of the things that we keep hearing is that there are more jobs than there are people right now in the United States. And I know Arizona, Phoenix area booming. We're hearing that we're probably going to find out on Friday our GDP is around 5%, which is incredible. So I know with the tax cuts, they're talking about some other tax cuts beyond the business tax cuts that came into effect in the first phase. So with the economy getting better with those rates, projections would be what? Because usually economy gets better, rates go up, right?
Yeah, I mean, you can Google any, economist and financial analyst, and they'll tell you, so for some lenders, rates are already in the fives, for the most part. But, your typical conventional interest rate, still not quite in the fives, but everyone is expecting by 2019 that it'll be there.
Right.
So, yeah, it should be interesting because we're here at the end of the summer. Summer's always busy. Other markets have slowed across the nation, but Phoenix is not, because Phoenix just has such a high demand.
Such a boom town right now. It has been for a while. But.
Right. But we actually have, versus like 12 years ago, we actually have the jobs and economy to support it. So, the market went crazy right before the recession. Our economy is 100% different now in the Phoenix area, and the wages are way higher. So nationally, over the last decade, the number of jobs we have and our wages have both outpaced the national market considerably. But I think you've seen it. There's definitely people that have come from other more expensive markets and moved to Arizona, like California.
Yeah, right now, a lot of people are moving here from California. A ton of people are moving here from California.
Right.
So
yeah.
We're getting a lot of inquiries from California, and different places. We're always getting people from the colder spots up north and stuff, but California is a big one. And I always ask people, why are you moving from California to Arizona? Because usually people are vacationing in California and stuff. It's so expensive. Taxes are so high, you just can't afford it anymore.
Right. So it's a hot market. We can kind of make the topic today. kind of focus on how we compete to get offers accepted. Things that we do differently. And honestly, they're simple things. It's just doing it in the right way. So on your end, I know that your clients are one of the first to see homes, right?
Yeah, yeah. I mean, once they're, we don't want to break anybody's heart, right? So we want to make sure they're qualified first, and we want to make sure they're fully pre-qualified, meaning that they haven't just had a phone conversation with you, which is a good start because then that kind of gives us a general idea where they are. But we want to make sure they got all the documentation into you before we take them out, and then once we start taking them out to look at homes, we know what they qualify for, how we can best negotiate the terms for them to make sure we're looking at houses that not only qualify for the loan amount, but the type of loan, because not all homes are going to qualify for every single loan that's out there all the time. Right. So we've got to take a lot into consideration before we go out. I always tell people, Evan's kind of like your general physician, and then we go in and do the dissecting, to kind of narrow things down and really make sure that we're narrowing down that search and pinpointing the house that's going to be best for you and that you're going to be happy with, and also be happy with the payments too, right? Got to make sure that you're not overextended. So
yeah, no, 100%. So I mean, competing in this market, starts with me making sure you're fully pre-qualified, because no one's going to take you seriously. But my pre-qualification is a little different. It's not just, hey, you're pre-approved. Hey, you're pre-approved. We have all the documentation on hand. Like, this is a solid pre-qualification. And then on your end, once they're ready to see homes, I mean, you guys are super quick on that end.
Yeah, I mean, we're right on top of it. Once we know we've got the qualification for you ready to go, I mean, we're on top of it. We always recommend too that not that we don't want to take you out right away, but if you can strategically plan on going out on a Tuesday or Wednesday, for instance, especially during the day, there's going to be a lot less competition because, honestly, we're in a very competitive market right now. That's why nobody will even entertain any offer that we write up without a lender pre-approval or a proof of funds if you're paying all cash, right? So we have to have that letter from the lender in order to prove the seller, to the seller, yeah, we can afford this, we can pay for this. And that's a really big deal when we go out. So once we do that, we're out right away looking at homes strategically Tuesdays and Wednesdays because everybody's working, right? Most of the time people want to go out either in the evenings or especially on the weekends. And I get that. People have to work, right? But strategically, we always recommend Tuesdays and Wednesdays are the best because what will happen is if you put an offer in on a Friday or Saturday or Sunday, they're going to wait till probably Monday most of the time to collect all the offers that come in over the weekend because they just know everybody's going to be out there looking at them. And then once they get those offers in, whether it be 2, 3, 4, 5, 10 offers sometimes or more, then you'll go ahead and make a decision at that point. They may not even give you a chance to counter in some circumstances because if they have those multiple offers, they may not even want to waste any more time. They may just want to move forward with the best one they get. So it's important to have a strong qualification and make your strong, I always tell people, how are you going to feel in 24 hours if you didn't get the house? In other words, so you want to make, if you really, really like the house, let's go in strong with a good qualification and we'll make it work. But sometimes, and I understand wanting to get a deal, but again, how are you going to feel the next day if you didn't get that particular house?
Yeah, I mean, unfortunately, there's not much negotiation on the buyer side, unless you're looking at a high luxury market.
Under 250, 300,000 on the west side, maybe a little bit more on the east side of town. In most cases.
Yeah. So I would say 1, strong pre-qualification that we work with. 2, you guys are always super available to show homes. Yeah. 3, you guys strategically try to see homes on days that other people aren't taking a look at homes. And there's definitely things like I follow up with the listing agent if I know it's a multiple offer counter situation to tell them how good my client is and our pre-approval is. And I know you guys do specific things with your offer too to put it in a better place. And it's not necessarily paying more money. Like we always want to save our clients money. It's just what can we do better to help our clients get that offer accepted without increasing the price. So
that's right. And you're really good at following up with our listing agents to make sure that is set in stone by phone and email, and that they understand how well qualified you have them. Also, one of the things we've been impressed with since you opened up your new brokerage, and not a lot of people would know this on the back end, but it's pretty cool that if someone has their own down payment, especially, I think it's about a 48-hour turnaround for underwriting. Is that correct now?
Yeah. So,
I mean, how long does it usually take for, these, call them the big ships, right? The big mortgage companies out there. How long does it take them to get to that point typically?
Yeah, I mean, usually it takes them 2 to 3 weeks, honestly. If the client signs their stuff when they go under contract, we typically have approval within 48 hours.
That's amazing. That is amazing. And no lender fees.
Yep, no processing or no underwriting fees charged by Modern Home Lending. So.
And again, what could the savings be from what to what on a?
I mean, typical underwriting processing fees are $1,600. However, you're also getting a lower rate. So I know this sounds crazy, but I've helped clients save over $10,000 on their deal.
That's awesome.
So
and I've noticed, when we get people who maybe were qualified prior and they come to us, you're qualifying them typically for $10,000, even sometimes $15,000 to $20,000 more.
Right, and that's the same thing. If I can help you get a lower interest rate, one, if you stay at that price point, it drops your payments, or two, you can get a bigger house for the same payment.
Right.
So that's a lot of people don't realize how big of an impact the interest rate has. So, my goal is to help you find the lowest interest rate that makes sense for you, and then, go from there and help you get a good deal.
That's right. Let's talk real quick about the hurdles and that we have a lot of times with people maybe not thinking they can buy a house, or just not even to start. So the starting point we've already talked about. You want to have your realtor and your lender, right, and be pre-qualified, so you know what you can afford, and you've got professionals helping you throughout the entire process, so you don't get into any legal trouble. You don't lose earnest deposit, whatever the case may be. You're well taken care of. The other thing that comes up is down payment, right? A lot of people just don't have the down payment. That's another hurdle. So in order to solve that, what can you offer them, Evan?
So I like to say there's 3 things you need to be pre-qualified. The first is credit, but that's almost not true, because we can do loans with no credit scores. So if you don't have bad credit, if you don't have any credit, that's fine. We can document other things to document that you pay your rent on time, make your payments on time. So you need credit. If you do have credit, I just sent out a pre-qualified client with you earlier that was below 580 because they had a decent down payment. So a lot of people think, I need a 700. That's not necessarily true.
Wait, so let's say that again. Below 580, he got them qualified.
Yep. Got them qualified, and it was no problem. Like no extra hoops to jump through. This client had below 580. As long, they need at least 10% down, but at 580, you need at least 3.5% down. So that drops quite a bit, and there's a potential grant program. So credit, they're actually not that bad nowadays. Income, we do need 2-year employment history. It's okay if there's a little gaps here and there. If it's less than 6 months, usually not a big deal. If it's more than 6 months, then we got to look a little deeper. But, I have clients that are worried because they're switching jobs and they're going from one job to another, and they're like, how long will I need to wait to buy again? I've had clients switch in the middle of escrow. As long, I don't recommend it unless you run it by me and just make sure, hey, we can document it. Okay, you're going from job A to job B, similar industry, no problem at all. You can switch in the middle of escrow. Like, you don't even need to, be there more than a day or two. So credit's not that bad. Income, we definitely need to see some kind of income. That's a law. We need to verify income. And then as far as
okay.
yeah, I mean, 12 years ago that wasn't the case. You could just say stated income. Anyone made $1 million. Like there was no documentation needed. Legally, we're required per Dodd-Frank to verify that, which I'm glad is out there because
Yeah.
I make sure people that actually deserve loans are getting loans. And then the third category, so we got credit, income, and then our third category is assets or equity or down payment. But Chris, you and I know we have 7 different down payment assistance programs.
That's what I wanted to get to. So to get over that hurdle of down payment, there's 7 different ones that you have.
Yep.
And you said from a 580 credit score.
One of them starts at a 580. 5 of them start at a 620, and then one of them needs a 640. So,
wow.
Yeah. But there's a few that I like to use more than others because they're better for clients. But chances are I know this just because I see it all the time. I talk to clients that they think, they're at least 6 months, a year out from buying. And I say, hey, you're qualified. You can get down payment assistance. You don't even need to pay your full down payment. You can buy. So.
Right. And the other thing that comes into play sometimes is, and a lot of people don't even know this exists, whether they're buying or selling a house, you talk to them about it, and they kind of deer in headlights. But closing costs. Mm-hmm. Now, is that something that you can solve for them too, as far as closing costs are concerned? If they don't have closing costs, and typically how much are those closing costs? Is it basically the closing costs would be what? Your title fees and...
Yeah, I mean, there's so many different fees that can go into it. A year of homeowner's insurance, escrow fees, title insurance, prepaid interest, prepaid taxes, other prepaid insurance, home warranty, HOA. I don't like to, I definitely make sure my clients understand all that, but I'd like to give a generic figure. On a $300,000 home, because we don't charge processing and underwriting fees, typically those are going to be somewhere around $3,500 to $4,500. Those range based on so many different factors, but that's a good ballpark for you.
Right.
Definitely not set in stone. But that is something, if you have your own down payment, we can help cover most or all of those closing costs. So that's something that I don't think a lot of lenders can do. One, because they're charging fees, so they got to cover their own fees before they cover anyone else's. And it makes you more competitive in the marketplace. Let's say you only have your down payment. Well, let us help you cover your closing costs so you don't need to ask the seller to pay for it. And I know you're good. Like, you guys are great at negotiating the seller to pay closing costs. But when you have 10 offers on the table and someone's not asking for closing costs, they're going to go with the offer where they're not asking the seller for help. So.
Right. Well, and what helps us do that is, again, having a lender like yourself who's going to communicate well and be available to the listing agent so they know he's actually there and available, easy to talk to, and you have all the documentation listed on the sheets that they're going to see, and they can ask you all the questions they might have. So super important, guys. It makes our job a lot easier. Again, it's having the right team in place, and we always recommend Evan because of those things. So the usual hurdles of how do I get started, and we start with the realtor, the lender, getting pre-qualified. We put together, of course, we're going to put together the home search for you, get off of Zillow, let us filter out, for the loan and everything like we talked about earlier to make sure we're looking at the right properties. And then we're going to be able to negotiate that better deal for you because of the things that Evan's done up front for us and for you. Any other hurdles that you can think of, Evan, that are pretty typical that we see? One of the other things that comes up, and I'll just bring this up real quick, is sometimes you get people that are interested in distressed properties, and I totally get that, especially after the crash. A lot of low-priced homes were on the market, distressed. But a lot of times, not so much today, but in the past, it still is kind of an unknown because the bank still has to approve a short sale, for instance. A lot of times they're not approved, when they go to list right away. And the bank can decide to do a lot of different things. They can collect the insurance money on it. They can send it to auction. They can do a lot of things midstream. It could be like a regular escrow, 30 to 45 days sometimes. Today with not having as many of them, but a lot of times, they could be, make you wait 3 months, 6 months, a year possibly,
Yeah.
and you just don't know what's going to happen in the end. So, Evan, you want to add anything to that on distressed properties?
Yeah.
Really more one of those things where you're an investor, I guess, and you kind of
You're not on a timeline.
yeah.
You're not going to be bummed out if you lose on this property because you're trying to get a good deal. The one thing that I see happening is like we have long-term rate locks on our end where we can lock for more than 90 days. It's just on a short sale, I really don't like to lock our rate in until we get short sale approval
Right.
because we have no idea if it's going to be long enough. Or the longer the lock, the more expensive it is. So, the biggest thing I see is one, you got to have time, and two, you got to be willing to play the market a little. And chances are rates are going up just because that's where they're trending. That's the tough thing on my end. The last short sale I helped with was towards the beginning of the year. Took about 3.5 months to process. Rates were almost a quarter higher by the end. And honestly,
Makes a big difference.
if they paid an extra $5,000 and went for a traditional sale and went with rates several months ago, it would have been, better long term for them. But it's all personal preference, and yeah, you can get deals out there, but there's not a ton of short sales.
Not like there used to be.
I was looking at it, the delinquency rate. So the amount of people that are behind on their mortgage and foreclosing on their mortgage is like the lowest it's been in almost 30 years. But the funny thing is the same thing with regular debt as well. So like credit cards and all that kind of stuff. So it's nice that people are actually back to paying their bills and, on their feet.
Yeah, absolutely. We don't see a lot of short sales anymore, but it's one of the things that we do check before we go out. Another thing that we check is this a flip? Was it bought within the last 90 days? That's important to know for FHA buyers, correct?
Right.
Yeah, because we can't even put an offer on a home that's been flipped within the last 90 days unless that 90 days is up, obviously, because FHA doesn't allow us to. That doesn't allow Evan to basically fund that loan. Or
anyone pre-qualified, the FHA's guideline is the purchase contract that you're going to close on has to be written after that 90 days. There are some ways around it. You might be able to get the seller to take it off the market beforehand for you and then write a contract or rewrite it. But, lots of these guys that are flipping pretty quickly, and they don't even want to deal with FHA because they can deal with a conventional or cash buyer like right away.
Right. I want to move on to one other thing real quick, and that is, people think I got to have a ton of money saved up when I go to buy a house, and obviously it's never a bad idea to have a ton of money saved up. But the idea with a house is, part of the idea anyway is, you stop the increase in your rent payment, right? Because your rents are usually going up, especially in Arizona, constantly going up. And also your house is kind of like your forced savings, right? Because you're going to gain equity over time, and you're also going to have some tax benefits. But what I want to talk about next is home warranty to kind of solve the issue of I got to have a ton of money saved up and homeowners insurance and the difference there. But before we get to that, any other ideas on getting over the hurdle of down payment? Because you've got all these programs, but what if someone's like, yeah, I don't have that. For instance, can they use their 401k? Could they get a gift from a relative? How does that work?
Yep. Tons of people, if you're borrowing money from yourself, so your 401k, that's your money. If you own a home, you can borrow from your own home to put as a down payment for your next home. I typically, if you have a 401k, everyone's situation is different, but I don't mind borrowing from it because you're paying yourself back with interest in most cases.
Right.
So if you're paying interest, it's not going to a bank, it's going to you. It's going to your retirement. Gifts from relatives, with most loan programs are acceptable. So there's a bunch of different ways to find it. Some employers have some programs, very rare, where they can help you with your down payment. But for the
Right.
most part, down payment assistant programs, we have some that go down to 580. We have some with no income limits. So, we have some that you don't even need to be a first-time home buyer for, or we can look at 401k, gift, etc. So.
Yeah, and that's another thing too, real quick, to point out to people who maybe are on the fence or like, I'm going to wait to buy. Besides the interest rates going up, I just looked at it yesterday. I think in the last 12 months, we've seen about $33,000 increase in the last year in home prices or sales prices. The actual average sales price in the valley over the last 12 months. I was looking at it actually with somebody yesterday. And so when you add that together, you're looking at a higher payment, you're looking at a higher down payment, right? For if you're looking year over year right now, the way things have been going the last few years. So these are all things to keep in mind, I think. Evan, would you agree with that as far as, wanting to save more money and outpace all that on top of the interest rate?
Yeah, kind of like I talked about last week. Someone that had a 580 in December is getting a better interest rate than someone today with an 800 credit score on an FHA loan.
Yeah. Yeah.
So that's kind of crazy when you think about that. And really, that's 580 versus 800. That's a big spread. And then we're looking at only about 6 months difference here. And
right.
So interest rates, purchase price, that can play a huge factor, compared to just credit score, as far as your monthly payment goes.
Yeah. And guys, even if you're thinking about selling a house and buying a house, moving up, moving down, whatever it may be, you still the first thing to do is, we want to kind of have an idea what the home's going to sell for. And we can certainly do that here at the Mincolla Group for you. Best if we see the house to give you the best numbers on it, and kind of go over all the numbers in person. But you still want to talk to Evan too, so you know all the numbers as far as if you need a loan to move your money over with the equity, you still got to figure in all the numbers with the loan, right, Evan? You want to make sure kind of get that all the numbers up front, do it the right way.
100%.
So this idea that I got to have a ton of money saved up in order to buy a house. Again, never a bad idea to have a ton of money saved up to buy a house. But again, to get into the equity game, as I call it, or catch that wave, which I'm glad a lot of our clients have done. What we look at is, if you do have something that breaks down, like an appliance, electrical, plumbing, AC, especially in Arizona, right? Your air conditioning, HVACs, pool pump, whatever. We can write into contracts, whether the seller's paying for it or you're paying for it, a home warranty. So the day you walk through the door, it's already been set through title and title and escrow people over at Magnus Title, and Laura Bethel, who was on a couple weeks ago, she can make sure all that stuff's in the title package. So the day you walk through the door, if the dishwasher 2 days after you move in blows up, and starts leaking all over the floor, you're covered, right? If you've got the package to cover your appliances. Evan, as far as insurance, I know that's tacked onto the mortgage, so you want to explain a little bit more about that. With the warranty stuff, it takes care of more of the mechanicals and that sort of thing.
Yeah, well, warranty's focused on repairs. Home insurance is more bigger claims. So, think theft, weather, flood, that kind of thing, and then liability too. So, thankfully, you're going to be using your home warranty way more than you're going to be using your, home insurance.
Right.
The average homeowner files a home insurance claim. It's about 1 every 10 years. So it's kind of rare. Home warranty, I don't know what the stats are on that, but I know it's much more often. I mean, I've used my home warranty a couple times in 3 years. So, and I know a lot of my clients have used their, home warranties. Some you don't get any use, but some you could call them a couple times a year. So.
I've lived in my house for 6 years, and brand new house. I've had them out for garage door issue with some sort of short in there. I had them in for garbage disposal replacement. So you want to have a company that does fix or replace. Okay, that's another tip. Fix or replace. especially with the AC. That's a big one out here. But fix and replace, and it had them out like twice for refrigerator, brand new refrigerator 6 years ago. I had them out twice because they've got computerized parts and everything now. So, but yeah, super. And I've never used my insurance yet. Knock on wood. So super important. That's something that's figured into the loan as far as the insurance goes, and part of the payment that you make every month, right, Evan?
Yep. So most people have it escrowed. So most people have their home insurance, property taxes, and their mortgage all combined into one payment. So
awesome. Awesome. One other quick tip to you guys that you may not realize is when Evan does a loan, if you're buying a home, nothing against HOA homes. Some people like them, some people don't. But Evan asked, besides figuring in taxes and insurance, he has to also, and the interest rate, obviously, he has to figure in, if there's a homeowners association, he has to figure that into the equation, correct?
Yeah. So that's a monthly cost. And, it's kind of reasonable. What I tell people is, let's say you're buying a condo and you're just looking at condos, 200,000 maybe, $150 HOA fee, which is kind of typical. Let's say you find a super nice one that maybe has a concierge service, a nice rooftop pool, but it's $800 a month.
Sounds nice. Oh, yeah.
That's going to make a big difference in whether you can afford that condo or not. So with a home, condo, townhome, whatever, we need to account for, hey, how much is this monthly HOA going to cost? And it's almost like it's in the payment. So the bigger the HOA, the less you'll qualify for, only because more of your money is going towards the HOA versus your mortgage payment.
Did you say about every $50 take off 10 grand, basically?
Yeah, that's a good ballpark.
Somewhere around there.
Yeah, so if you have a $100 HOA a month, you're going to qualify for about 20 grand less. Total depends on the scenario, but that's a good ballpark.
Yeah. Awesome. Anything else you think we should add? Any hurdles? Guys have any questions? Jump in now for whoever holds your peace till next Wednesday. Anything else you want to add, Evan?
No, I mean, I think we talked about one, what we do to get our clients' offers accepted. Two, how easy it is to qualify in this market. And then three, once you buy, what can you do to help protect your home and make sure you're ready for repairs? So.
Yeah. The one other thing I would just mention, not to toot our own horn, but it's really important to make sure you're working with a full-time realtor or a real estate team. You want to make sure, obviously it's a licensed real estate agent, but even more importantly for higher code of ethics and further training, an actual realtor with a trademark as part of the NAR, higher code of ethics. You're going to get better treatment that way, typically. And again, that team is so important. I can't emphasize that anymore. I know we talked about it a few times in the last couple of weeks with Laura Bethel, also over at Magnus Title, but like with Evan and us and Laura, it just kind of got that synergy where we work together. We know how to make it work for our clients the best, whether you're buying or selling. We're able to really make sure that things are done properly for you and you're protected. One other quick note on those home warranties too. When you're selling a house, we always make sure that we put a home warranty on the home with one of our warranty reps also. So, Murphy's Law, you go to put your house on the market, something breaks down, right? So we want to make sure you're covered that way too. So we can talk to you more about that. If you have any questions, Evan, how do they get a hold of you?
You can go to modernhomelending.com. There's the apply now and also our phone number at the top.
Awesome. And be sure to contact us with any real estate related questions at all. It's 480-788-8569 at the Mincolla Group with West USA Realty. Cynthia and I and our team here would love to be able to talk to you more about your real estate needs. Thanks for joining us. Thank you, Evan. We'll see you guys next Wednesday again at 1:30. And we'll also be having some more giveaways coming up soon, right, Evan?
Yep. Fun stuff.
Awesome. All right. We'll talk to you guys soon. Thanks a lot.
See you guys.